Bitcoin has recently broken down from its current market structure. So let's talk about how does that tie in with historical downside that we tend to see in September, and also look at scenarios based on this historical data going forward, tying that in with the 4-year cycle, just to better understand what the worst case scenario for Bitcoin could be going forward. So let's dive right into the video update here. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So Bitcoin has been developing this black downtrending channel for a while now, while also developing a series of new lower highs dating back to mid-July, also developing a new series of higher lows dating back to early July. But recently we've seen a weekly close below both the July uptrend, this higher low, and also below the channel bottom here, potentially turning both of these into new resistance. Really important that we get a weekly close above 58,300, so $58,300 to reclaim this overall black downtrending channel. But at the moment we are dipping into what has historically been, over the course of this channel, a downside wicking, downside deviation zone, which have of course represented bargain buying opportunities. So we are dipping deeper into this region, but really important to talk about the September downside that we're seeing right now, but also historically what it means, because we're currently down 6%. So 6% with a fraction, and this downside this month is very similar to the downside of 2022, a little bit deeper than 2022 indeed, but getting very close to the historically recurring downside for September, which is 7% here, 7% in 2021, 7%, 7.5% in 2022, and very close to 5.5% in 2018 and 7.5% in 2017. So this downside of 6% is very similar to downside that we've seen in 2022, 2021, 2020, as well as 2018 and 2017. So really important to understand that this 6% downside is not out of the ordinary for the month of September. And even if we look at across all of these metrics here, we tend to see downside in September, but this tends to be downside that is single digit. And in fact, we've seen upside of, 2%, 6%, and almost 4%. So September tends to be typically a month of consolidation, but consolidation towards the downside. We do get consolidation towards the upside. Also, this is essentially what these single digit figures mean, that this is really non-trending on the macro sense. Single digit downside, upside, it's really just consolidation. If we take a look at it, and historically recurring is the number of 7% for the month of September. We've seen this on 3 separate occasions, and we might be seeing this for a 4th occasion as well. So out of 11, I think 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 in fact, but let's talk about the historical 11. Out of the past 11 times that we've seen 7% downside, this could be the 4th time in 12 instances. So really, it is a historically recurring figure that we see 7% drawdown in the month of September. But let's talk about 13% downside and 19% downside also. 19% downside, of course, was the worst ever downside that we've seen in the month of September. We saw this in 2014, so that's a bear market month. We need to highlight that we're 10 years on from that moment, and this is a halving year. So if we look at halving years, maybe we should be able to talk more about what we tend to see in halving years. 2020, minus 7.5%, which we're getting quite close to, actually, getting really close to that region. In 2017, or at least 2016, apologies, which is another halving year, that's 6% towards the upside. So 6% towards the upside, 6% towards the downside. This is single digit fluctuation that's really typical of consolidation. It is still 6%, 7%. Doesn't really matter what the direction of that is, because macro-wise, it's not as significant really. So those are the 2 halving metrics here. 6% towards the upside in 2016, 2020, 7%, 7.5% towards the downside, and now we're getting another 6% here. So single digit downside in and around those levels. That's something that we can compare to in terms of a halving year. But if we talk about this 2019 minus 13% downside, 2019 that was a macro accumulation range, so a pre-halving year. So 2019 can be best compared to the 2015 year where we got 2%, for example. It can be compared to 23% where we got 3% upside. So if you just compare to pre-halving years, really, 2015 and 2023, then we get single digit upside in macro accumulation years. So 2019 was an outlier in that respect because we got double digit downside. So not only was this downside compared to the single digit upside that we tend to see in macro accumulation years, 2015 and 2023, but we also saw double digit instead of single digit moves here. So 19% is the worst case scenario that we could see, and it happened in a bear market. And a double digit downside of 13% is something we saw in a pre-halving year. We have a halving year right now, so can we really compare them? But it's still worth talking about what the probabilities, what are the possibilities. 7% downside, we have seen that 3 times in the past before for September. That would get us into 55k. We're already really close to that happening for the 4th time ever in a September. So 7% has historically recurred before, and it looks like we're on target to achieving 7% once again. But if we talk about 13%, that could get us into the low 50s, and we got a capitulation wick into the low 50s before last month, in fact, and we capitulated. So this was a real capitulation wick here, grabbing that liquidity there, loads of panic sellers and just capitulation and maximum pessimism happening here. So panic sellers really capitulating at this point here. But if we were to drop into 51.5 here, 51k, that would get us a higher low relative to that capitulation wick, and I think that would be a really positive development should we get that indeed. But 13%, once again, we saw this happen in a pre-halving year. This is a halving year, so can we really expect 13% in the same way where a historical 19% downside that we saw in 2014, that would get us into 48k. Once again, 19% is what we saw in a bear market year of 2014. So very unlikely that we get this sort of pullback because we are in a halving year. That was in a bear market year, 19%. But let's talk about where a 19% pullback would get us in terms of the 4-year cycle. If we look at 4-year cycles, of course, each year represents a yearly candle, and each year represents a phase in the 4-year cycle. So we get this bull market peaking year in candle 1, the bear market year in candle 2, the macro accumulation and pre-halving candle in candle 3, and the halving candle in candle 4. And this candle 4, the halving year candle, tends to break beyond the 3-year resistance of the 4-year cycle. So 1, 2, 3, this is where that black resistance comes into play. We tend to resist from here, but we break it in candle 4. So going on with that, this is 1, 2, 3, a 3-year resistance. Even an upside wick in this pre-halving year of 2019 got rejected at this resistance, this 3-year resistance of 13,900. And in the halving year of number 4, we broke beyond there quite comfortably. Right here, once again, we have a 3-year resistance around the 46k region, which we've been rejecting from for 3 consecutive years. And we've finally broken it in candle 4. So the takeaways here are that, well, we have a candle 1 to expect, but this candle 1 is going to be in diminishing returns. So maybe we're going to get a candle 1, of course, but it's going to have less returns than what we've seen in the past. And candle 1 is a bull market peaking year. But if we look at the dynamics of how this transition occurs, candle 4 tends to set up a potential retest of this 3-year resistance into new support to propel price to new all-time highs and beyond. This didn't happen in the previous 4-year cycle. We never really got that retest here. But if we focus on candle 4 and the halving year candle, there is always scope for a retest during the year of that 3-year resistance, from resistance into new support, and it looks like there is potential scope for a retest of this level into new support. That would mean that we'd need to drop into 46k for that retest. That would mean that we'd need to drop 19% this month in September to get closer to 46k, which would be around 48k. But of course, since 19% occurred in a bear market in 2014, can we really think about this 4-year cycle level getting tagged? Because last month we actually got quite close. We got to 49k roughly speaking. So we got relatively close to this 3-year resistance of 46k. We got quite close there, but would we get closer to it this month? That's on the lower realm of possibility based on what we've seen in the past. 19% downside this month would be matching the 2014 bear market retracement, which is on the lower scope of probability because we're in a halving year rather than in a bear market. And this retest in of itself doesn't necessarily have to happen. However, going into the end of the year, for example, it would be interesting if we could get this sort of retest in the following year, in 2025, depending on how high candle 4 will close. But the main gist here is for candle 4 to close above 46k, because that's essentially what sets up the next candle 1 for a rally into new all-time highs and beyond once again. So candle 4 is positioning for that exponential upside that we tend to see in candle 1. That's the real takeaway here. But let's talk about, because we've really talked about September quite extensively, let's talk about the month that follows here. And we tend to see a green October. Green October across the board, with the exception of course, the bear market of 2014, 12% downside. So can we really expect 12% downside in a historically bullish month here? That's 13% downside really, but in a bear market year. So these two figures are really low probability based on the fact that they occurred during bear markets. But if we focus on the October results, 2018, 3%. 4% downside, but remember 2018 was also a bear market. So in October we saw downside only ever during bear markets, apologies. So we've ever seen downside during the month of October during bear markets. And if we actually focus on the 2022 bear market, we got single digit upside of 5.5%, which is still an outlier. If we are to see downside in October, then we tend to see in a bear market, but 2022 even put that tendency on its head. Typically, we tend to see double-digit upside ranging from 14% to even as high as 60% and maybe 60%. That's 2013, so we might not see those sort of returns, but 20%, 30%, that's something that has historically recurred in the past. So this downside in September has historically set up the upside in October. So it's really important to understand that October tends to be a bullish month, and we tend to see an average return in the month of October over 20%. So it is a bullish month, and it is one that's worth preparing for because the probability skews in the favor of October being once again an upside month. And it can be quite difficult to envision that when we're seeing red across the board right now. We're seeing pullback in Bitcoin's price action, crypto-wide pullback. Altcoins are shedding valuations also quite significantly. But it's really important to understand that when there is a storm, that precedes a great sunny day afterwards. So it is about maintaining balance. It is about restoring balance in the market. So in terms of what to expect when it comes to upside in October, then we can expect at least 10, 14%. 20% is something that has historically recurred in the past. 30% is something that isn't out of the ordinary in the month of October. So in sum, it just seems like this is a normal pullback in the market, something we tend to see across Septembers. This pullback isn't out of the ordinary, this 6% pullback. We don't often see double-digit downside, and when we tend to see it, it tends to occur in bear markets or pre-halving years. We're in a pre-halving year. We're in a halving year, apologies, right now. And when it comes to October upside, then let's focus maybe on a halving year. 27% upside, almost 30% in 2020. 2016, 14% upside. And so in 2024, another halving year, that's probably the upside we could potentially start to expect some 10, 14% to 20%, maybe slightly higher. That's something that history is suggesting we could see in October. And for Bitcoin to rally quite extraordinarily, like it tends to do in October, we first have to see some downside occur, because for great returns to occur, we need to see pulling back before that tremendous upside occurs. So that's about it for this video. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.